Ring the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast. Well, Carol Massar and Tim Stenovec, welcome to our audiences across our Bloomberg platforms. Carol is smiling, but the market isn't smiling right now, Carol.
No.
Right across the screen, and right now, most of the indices at session lows.
And similar to yesterday, some fairly broad-based selling. Most names in the S&P 500, Tim, are lower on the session.
Yeah, we just spoke to Jeff Krumpelman over at Mariner Wealth Advisors. He was in the studio with us, and he said that he's still bullish. He said he didn't describe himself as bullish, but I'm going to go ahead and apply the label to him because he thinks that we could see 4,800 to 5,000 on the S&P by the mid part of next year. But we could, on the way, it could be bumpy. He said we could see 3,900 on the S&P until we get to that.
You also, of course, have pressure from overseas. What we're seeing in China, the offshore yuan blowing right past 7.3 per dollar, and the efforts by the PBOC, they're not really doing much to slow the slowdown.
We talked a lot, of course, about technical levels, and those are back in play as the NASDAQ, the S&P are now below some of their key short and intermediate term moving averages here. And that could, of course, end up becoming a big part of the story here, particularly with volumes light. Sometimes when you get those light volumes, that means technicals tend to drive the market maybe much more ferociously.
Yeah, and you look at some different industry groups, and we'll dig a little bit deeper in just a moment, but you take a look at something like the home building industry. It's down, those stocks down about 2.4%, some underperformance. We did get some economic data points on that today. So some markets, or some sectors of the market, I should say, remain having a tougher time today.
Yeah, absolutely. And of course, as we had that spike lower in U.S. equities here into the close, we had a spike higher in the VIX, back around 17 as we get the closing bells in New York. Down half a percent on the Dow Jones Industrial Average, firmly below 35,000. The S&P 500 lower by more than 30 points, or about 0.8%, while the NASDAQ Composite is going to finish the day down by about 1.2% here on the day. The Russell 2000, that's your relative laggard, lower by 24 points, or 1.3%.
All right, I'm going to go to those Chinese names that trade here in the United States. We've certainly been talking about China, it feels like, every day for the last week, easily. Down another 1.6% today. But Scarlet, you're looking at the NASDAQ Golden Dragon China Index down about 7.5% in the last 4 trading days. So we continue to see that index move lower.
And I'm looking at the decline advanced line on the NYSE. You have 3 stocks down for every one that is higher on the stock exchange. When you look at the industry groups by 24 groups, that's level 2, you only have 3 industry groups finishing in the green. They are the insurers, as well as the utilities and food and staples. And insurers really being led by Progressive, but you look at utilities and food and staples, that's a very defensive posturing. On the flip side, the leading decliners are autos and components, chip makers, and media and entertainment, each down at least 1.3%.
All right, folks. So definitely a more negative tone in the trade today. Low volume, as Romaine mentioned. But let's get to some of the individual gainers. And there's a few standouts when you talk about the retail sector. TJX finishing up with a more than 4% gain in today's session. The number 4 gainer in the S&P 500. I believe an all-time high for that name today after reporting stronger than expected comp sales for the fiscal second quarter in both the TJ Maxx and Marshall brands, and also their home goods businesses. They increased their projections for the full year. Stocks up about 13% so far here in 2023. Let's go to Target, which has been an underperformer in the retail group, finishing way off its highs, at its highs today, up more than 8%, but still finishing up this Wednesday with about a 3% gain. A surprise big surge in their profits in the second quarter, overshadowing the company's really increasingly cautious outlook on the rest of the year. The company did cut its annual profit forecast. Sales decline was Target's first in 4 years. More to that story. You could check out more on Bloomberg.com, but again, up 3% in today's session. And then I do want to go to, Scarlett, you mentioned this, Progressive, number 1 gainer in the S&P 500, finishing with almost a 9% gain, so just off its best levels of the day. Number 1, heavy volume, options 2 surging, call volume way outpacing, put volume up the most since March of 2020. Analysts said the monthly results showed improvement. The insurance company reported net premiums written for July of $5.95 billion versus $4.93 billion. That's year over year, so some outperformance there, Tim.
All right. right, you got the outperformance. I got the laggards, the underperformers today. Another day, another price cut from Tesla shares, finishing the day down more than 3%. The second worst performer on a points basis in the S&P 500. This time it's versions of the Model S sedan and Model X SUV in China, cutting prices by about $9,600, coming just 2 days after Tesla marked down the long-range and performance versions of the Model Y SUV, and just 1 day after Tesla actually introduced lower-range versions of its Model S and Model X here in the U.S. that cost significantly less than their earlier counterparts. We talked a lot about China today. We're going to continue talking about China more throughout our program. Worth looking at shares of Tencent finishing it down by close to 3%. This is the ADRs that are traded over the counter here in the U.S. The company did report strength in online advertising thanks to its TikTok-like video feed on WeChat, but fell after reporting second quarter sales that came in below estimates. And the strength in online advertising was offset by revenue from games both at home and abroad. Fell short of expectations. And here's a good one. Saks Prente Golf. Romaine, do you know this one?
Yeah. It's been all the talk today,
Are you a golfer?
Ted. Yeah, I am.
Yeah,
Really? I didn't know that.
Well, if you need a new $400 putter,
I don't.
these guys make it. Finishing the
Although
day down
I should point out that I am getting a driving iron delivered to
Wait,
me.
you're
But don't
getting a
tell my
driver?
wife.
They're going to pick
I'm
you
trying
up and
hide it
take you to
from her.
work? Is
Yeah.
that what's going to go on?
It's a golf.
I thought you already had
It's
a
a golf
driver.
club, Carol.
What is
It's a golf club. Okay, well, yesterday shares were up more than 600%. It was the best performing, it was the strongest U.S. stock market debut of the year. We can go ahead and call that then. Now it's got a market cap of just over $60 million. Anyone know how much it did in sales last year?
No, how much?
$190,000.
90,000?
So that buys you,
$190,000.
that buys you like a few putters, basically?
Yeah. Well, putters are $400 each. It's not
Those
that
are expensive.
Well, I hate
that
to
many
break it to you,
putters.
Tim, but they get more expensive than that, believe it or not. And as I found out the hard way, the more you
did not
pay
know that.
doesn't necessarily correlate with a
Obviously,
better
I'm
game.
not a golfer.
Yeah, just lighter wallet. That's the correlation there. And, well, I guess interesting lighter wallets in the Treasury space, at least on a price basis. Yields up across the board here on the longer end of the curve, up about 5 basis points on the 10, the 20, and the 30-year. Your 30-year yield firmly back above that 4.3 level, the highest level going back to October of last year. And, of course, that 10-year still camped out at its highest level going back to mid-2008. So this really raises a lot of questions, guys, about sort of what's going to drive this market. And actually, we are getting some earnings crossing the wire right now. Maybe that drives the market. Cisco, blast from the past, we're out with their earnings here for the fiscal fourth quarter here. The company coming in with revenue at about $15.2 billion. That looks like pretty much in line with estimates here, and adjusted EPS at $1.14, slightly higher than what the street was looking for at $1.06. Now, here's your guidance going forward. On the fiscal first quarter, the company is saying that its revenue should come in at about $14.5 to $14.7 billion. That's roughly in line with the average of street estimates here. And the company is also saying that its adjusted EPS for the fiscal first quarter would also come in slightly above estimates. So you see the shares there slightly lower here in after hours trading.
Yeah, it's interesting. What we want and what we want to hear from Cisco specifically is some insight into what the corporate environment is basically spending on IT. And we do have Chuck Robbins, the chair and CEO of Cisco, in the press release, talking about a milestone year for Cisco, record performance in both the full year and the fourth quarter. He says we are seeing solid customer demand, gaining market share, and innovating in key areas like AI, security, and cloud. This momentum gives us confidence in our ability to capture the many opportunities ahead. So sounds kind of upbeat, but investors may be a little disappointed there. Stock's down about 2.8% here in the aftermarket.
I'm really curious to hear what they have to say about their acquisitions. Just looking at how many purchases they've made so far this year, 7 of them. I want to understand how it all fits together as part of their long-term vision. I know that there's this, breakdown between software sales and hardware sales. The software sales are more attractive, higher margins, also recurring revenue, which is attractive to an old school tech company like Cisco.
Well, in fairness, I think those acquisitions, a couple of those have already been accretive to revenue. And remember, this was a company that had a negative sign in front of its revenue growth for quite some time. And they've solidly, we're still in single digits, but they've returned to revenue growth. I know it's not like the hyper growth that we get out of these other tech companies, but I guess growth is growth, right?
Old school tech company.
Well, an old school tech company now talking about AI, so you can go ahead and add that to your list of companies that are talking about AI.
Is that going to be a game changer?
It was literally in the press release, right?
Oh.
The
I'm waiting for
saying
AI. When does AI appear?
They're innovating in key areas like AI, security, and cloud. So I imagine there will be some questions from analysts on what exactly it looks like when it comes to AI.
Yeah.
Can you even write a press release now without mentioning AI?
No.
That's the thing.
No.
Because then the AI would just read the press release.
Remember
and
when
be
it
like,
used to be like
mentioning it?"
cannabis or
Maybe-
plant-based? Now
Maybe
it's
if you're
AI.
a golfing company, you can do it.
Yeah.
I don't know.
190,000 in revenue.
They've got a fair amount of cash too on hand, so it'll be interesting to see maybe how they are pushed to be like, what do you do with it? How much do you return to shareholders, or do you do something? Why are you smiling,
Me?
Mr. Smart Bostick?
Because he's got a driver being delivered today.
There's a lot going on in my head, actually. It's
Thinking about his golfing
It's a
game.
driving iron. It's one of those hybrid. I never use the hybrids. Have you ever used the hybrids?
No.
Yeah, okay. Yeah.
A hybrid
golf.
There you
putter?
go. Huh?
hybrid
No, it's
putter?
like, how you hit the ball off the tee, Carol Massar. And normally you use a driver for that, or you can use an iron. And then they have something called a hybrid, which is kind of a combination of both. And in theory, this is going to make my golf game so much better, which
All
it
right.
probably
I
won't.
feel like
Romaine's gonna give us
so
golf
much
lessons.
mansplaining
He's
is
gonna
going
give
on
us golf
about
lessons,
the
and I'm
game
gonna learn
of
how to
golf.
learn how to tie a bow tie.
And that's not mansplaining if you ask for the
Feels like-
mansplation.
We got to go.
Everybody
Do we?
should see the
Yeah.
Barbie movie. I'm just going to say that.
Okay.
All right.
Who's mansplaining now?
All right. I guess I am. I think they call that women's planning. All right, guys, that's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals, Wednesday, one and done. We will see you again, of course, tomorrow.